you need to see what just happened. The US military just made a move that changes everything we thought we knew about the silver market, and almost nobody is talking about it. The whispers of a coming shortage have officially transitioned from fringe message boards to the highest corridors of American power. And look, I've been tracking this for years now. The warning was always clear. There would come a moment when the people who control the currency in the military would wake up and realize that digital digits on a screen cannot replace physical atoms in the real world. We predicted that when the true deficit emerged, the state wouldn't just sit there and watch. They would move aggressively to nationalize the supply chain to ensure the survival of the republic. And that moment, it's no longer hypothetical. It's happening right now while you were busy with holiday shopping and the mainstream media was obsessing over the latest tech valuations. The Department of Defense quietly initiated a strategic maneuver that fundamentally rewrites the rules of the precious metals market. I'm talking about a complete paradigm shift that most people still haven't noticed. The era of relying on global adversaries for our most critical industrial materials is over. Around mid-December of 2025, a landmark agreement was finalized behind closed doors that signifies a total shift in U.S. policy. The federal government, through the Departments of Defense and Commerce, has entered into a massive $7.4 billion partnership with Korea Zinc to establish a primary non-ferrous metal smelter in Clarksville, Tennessee. Now, this isn't some symbolic gesture or a small-scale grant to make politicians look good. This represents the first major facility of its kind built on American soil since the 1970s. Think about that for a second. For 5 decades, the United States was perfectly content to outsource the heavy lifting of mineral processing to nations like China. But the current silver squeeze has forced Washington to bring that capability home, and they're doing it fast. The financial scale of this project is significant, but here is where it gets really interesting. The structure of the deal reveals the true depth of the government's anxiety. This is not a simple loan to a private entity. The Pentagon is taking a staggering 40% equity stake in this facility. Let that sink in for a moment. The United States military is now a part owner of the production infrastructure. What does that mean? It means the silver, zinc, and indium processed in Tennessee are not destined for the open market. They're not going to help commercial banks manage their short positions. These metals are being diverted directly into strategic military stockpiles. They're being removed from public reach before they're even refined. This facility is engineered to process 1.1 million tons of raw material annually, focusing on 13 specific metals. And here's the kicker: 11 of those 30 materials are classified by the U.S. Geological Survey as critical minerals, with silver sitting at the very top of that hierarchy. The government has finally realized that without a guaranteed supply of silver, their most advanced technological assets, from F-35 fighter jets to satellite arrays, simply cannot function. They looked at their dwindling reserves, they looked at the looming export restrictions from China, and they made a choice. They chose to intervene, and this move validates everything the silver community has been arguing for years. Silver is not just some collector-esque item or a pet rock. It's a strategic necessity that the free market can no longer be trusted to distribute efficiently. What we're witnessing right now is the birth of resource nationalism. On January 5th, 2026, the global market began to reflect this new reality. While the Pentagon was securing its supply back in December, the rest of the world woke up to a Chinese export ban and a price explosion in Shanghai that reached $82 an ounce. The smart money moved before the house caught fire. Now, the general public is left watching the flames. But perhaps the most startling aspect of this entire shift is the involvement of J.P. Morgan. The very institution that has been the architect of paper price suppression for decades is now the entity financing the most significant physical infrastructure project in recent history. If you believe they're doing this for simple interest income, you're completely misreading the map. They're not doubling down on their short positions. They're building a hedge against the very paper market they created. They see the end of the era of paper contracts, and they're positioning themselves as the new gatekeepers of physical flow. JP Morgan is pivoting from betting against the price to owning the infrastructure that controls the supply. Think about what that means. They recognize that in a world defined by physical deficits and the breakdown of Western vaults, holding a paper short is a liability that could lead to insolvency. By financing the Clarksville Smelter, they're restoring their entire business model. They're creating a closed-loop system that connects Latin American mines directly to a U.S.-based fortress, bypassing the empty vaults of London and the hostile refineries in China. This creates a brutal reality for the global market. While Washington and Wall Street are building their lifeboats in Tennessee, the rest of the world is facing a tidal wave of rising prices. The data coming out of Asia is catastrophic for anyone still holding paper shorts. In Shanghai, The price of silver has hit a level that translates to roughly $82 per ounce. Meanwhile, the New York markets are still trying to convince the world that silver is only worth $75. This $7 spread isn't just a minor glitch in the system. It's a total failure of the global pricing mechanism. In the world of high-frequency trading and instantaneous information, a $7 gap is a screaming alarm that the West has lost control. It creates a giant vacuum effect where every ounce of available silver is being sucked out of Western vaults and shipped to wherever the bid is highest, which right now is the Chinese industrial complex. Washington realizes they can't win a bidding war with China without admitting the dollar's weakness, so instead they're building a physical wall around the supply. The $75 price on the COMEX is a paper mirage, a figure set by banks trading digital promises. The $82 price in Shanghai is the physical reality set by factories that need actual metal to operate their production lines. When paper meets physical in a crisis, physical always wins. The persistence of this price gap proves that the Western financial plumbing is completely clogged with derivatives that cannot be settled with real metal. The Tennessee Smelter is essentially a dam designed to stop the flow of silver to the east. But here's the problem: that dam won't be finished for years. The location of this project is also a masterclass in geopolitics. By placing the smelter in the American South, the U.S. is attempting to intercept the flow of ore from Mexico, Peru, and Bolivia before it can reach Chinese ports. This is about securing the Western Hemisphere and creating a gravitational pull stronger than Beijing. It's an attempt to integrate Latin American resources into a fortress North America supply chain, effectively reviving the Monroe Doctrine through industrial dominance rather than military force. The timeline they've provided with operations beginning in 2029 tells us exactly when the Pentagon expects the resource war to reach its absolute zenith. They're racing against the clock that's already ticking. They're betting $7 billion that by the end of this decade, the only metal you truly own is the metal you can physically touch. This is the final nail in the coffin for the globalist trade model. We've moved from just-in-time efficiency to just-in-case national security. And that shift changes everything. For you as an individual investor, this is the most significant bullish indicator in a generation. When the most powerful military and the most powerful bank on the planet stop playing paper games and start hoarding physical assets, you need to follow their lead. The futures market is walking dead because it no longer reflects the reality of the physical atom. The Department of Defense didn't spend $7 billion because they could just buy silver on a screen somewhere. They spent it because they know the screen is a lie. They know what's coming. The game of musical chairs is ending, and the Pentagon just grabbed 40% of the available seats. Every ounce you secure today is an ounce that the state and the banks desperately want to control. You're literally front-running the very entities that usually front-run the entire world. This isn't about collecting shiny coins anymore. It's about holding military-grade collateral in a world that's fracturing into two distinct economic blocks. The Shanghai breakout was the warning shot. The Tennessee Smelter is the declaration of war. When the government enters the market as a whale with no price sensitivity, the floor beneath the silver market becomes permanent and unbreakable. So don't let short-term paper volatility shake you out of your position. Remember that while the price on your screen might fluctuate day to day, the most powerful entities on earth are writing multi-billion-dollar checks to make absolutely certain they never run out. The shortage is real. The panic is visible at the highest levels, and the squeeze is now inevitable. If you found this analysis critical to your strategy, make sure to subscribe and hit that notification bell so you don't want to miss our next update on the Great Decline. Leave a comment below and let me know, are you holding the line with physical, or do you still trust the paper system? And make sure you watch the next video where I break down how the solar industry is adding even more fuel to this fire. This is about more than money. It's about the security of your future. Stay vigilant.